This year, I've gotten paid $87.73 just to hold stocks in my investment account. Let me explain. Welcome to the Investing Basics series, part 5. Let's chat dividends. Dividends are a percentage of a company's earnings paid to its shareholders as their share of the profits. Let me explain that in English. When a company makes profit, they may choose to share some of those profits to their shareholders, aka you and me who own a stock in their company. Dividends can be distributed annually, semi annually, quarterly, or monthly. So, how exactly do you figure out how much dividends you would receive if you own a stock? It's something called a dividend yield. A dividend yield is the dividend paid per share, and it is oftentimes expressed as a percentage. For example, 2%, 3%, 4%. Let's say you bought a stock from company X for $60 a share, and the dividend yield was 2.5%. This means the dividend received per share you own is $1.50. $60 times 2.5%. Now, depending on how the company pays out the dividends, annually, semi annually, quarterly, or monthly, will determine how you receive that payment. For example, if they paid out the dividend annually and you owned one share, you would get $1.50 once a year. If they paid it out semi annually, that means you would get 75 cents twice a year. If they paid it out quarterly, that means you'd receive about 37 cents 4 times a year. And if they paid it out monthly, that means you would receive about 12 cents every month. And of course, the more shares you own is the more dividends you'd receive. Now, the reason people love dividends is because you only have to hold your stocks in order to receive it, meaning you don't have to sell your stock back into the market in order to receive the dividend. And you can receive dividends on ETFs, mutual funds, and individual stocks. Now, the pros of dividends is that it is passive income. It's great for long term investing. The dividends you receive can be reinvested back into the stock, and many stable companies pay out dividends. Now, the cons of dividends is that not all stocks pay out dividends. Dividend yields can change or stop. They don't grow as fast as growth stocks, and you may need to invest in a lot of stocks in order to actually see a great return of dividends. So, now that you know what a dividend is, make sure you continue to like and follow for more finance and investing basics for the girls.